Hello and welcome to this week's episode of Nucleus Investment Insights. Today we have Michael West on the show and we're on the hunt for the abuse of power. There's a good argument that in Australia over the past 20 years, some of the best investments you could have made are in regulated companies' and vested interests. Socially and ethically, we're supporters of Michael's work via his company, Michael West Media, which holds companies to account for unpaid tax, poor corporate practices, and also government and regulatory concerns. One of Nucleus Wealth's core values is transparency, and we're supportive of his calls for change. However, on some level, as an investor, you need to invest in what the world is, not what it should be. You need to be aware that much of the value, in particular Australian stocks, is tied to their closeness with regulators and political parties. If this changes, then the winners and losers in the stock market could be dramatically different. Today, we're going to dig into where companies might be vulnerable on this front with Michael. As always, we have Damien Klassen, Nucleus Wealth's co-founder and chief investment officer. Damo, welcome. I'd also like to extend a very warm welcome to our special guest, Michael West. Michael, welcome. Thank you for joining us. It's an honor and a pleasure to have you on the show.
Great to be on the show, fellas.
Excellent, excellent. My name's Sam Kerr. I'm the senior financial advisor at Nucleus Wealth. Just a reminder, the information in this podcast is general in nature. If you do want to have a more specific conversation about your personal financial situation, please go to our website at nucleuswealth.com/contact, and you can book a call with me to have a no obligation chat. We are live every Thursday at 12:30 Australian Eastern Time, so jump onto the Nucleus Wealth YouTube channel and you can ask any questions that come to mind, and we'll do our best to answer them during the show. You can also follow us on your preferred podcast platform, as our show is available on all the majors. So those are all the formalities out of the way. So Damo, I'll hand over to you to get the ball rolling.
Yeah, thanks, Sam. So Michael's an independent journalist running a website sort of very focused on a lot of stuff about sort of holding companies and governments to account. And so, we wanted to get Michael on partly to help support, I guess, and get the word out and more people listening to, and more people sort of focused on independent journalism because of all the benefits of it. But from an investment perspective, it's actually something I'm very interested as well in. And I guess the reason why I think this way, certainly about Australia, is that Australia's dominated by oligopolies and some quite regulated businesses. We saw the mining profits tax sort of got to the kibosh and a prime minister kicked out because of it, and a real easy run going through to a lot of mining companies, and particular oil and gas companies, on a regulation and tax front since then. And so, from an investment perspective, it is for me very important to try and work out when are the winds starting to change. Now, I would love them to from an ethical and a social perspective, but within a lot of these sectors, they aren't, and I guess I'd argue that potentially things are getting a little bit worse in some of them. But that's what we wanted to get Michael on to discuss some of the individual ones and really look for these changes, because to use an example, the Australian banking sector gets some of the highest returns on equity in the world. Now, we've just been through a period where banks were effectively government funded in terms, or at least Reserve Central Bank funded. And the argument is that, well, Australian banks are earning a higher return because they're actually closer to the regulators or closer to the central banks. And so they've been offered better deals than what, say, the European banks are doing, and that allows them to earn a better return. So if any of that's changing, we want to know, and we want to know early on these. So I guess I've got a whole bunch of things I want to run through and go, but maybe we could start, Michael, with the banking sector. And I guess there's obviously been we went through this Royal Commission. There was a whole bunch of things that they said we should be doing. We had the Liberal Party say that they were going to do most of them. The Labor Party sort of said they were going to do most of them. I guess from your perspective as an independent journalist, how are we going through the list of recommendations from the Royal Commission? So in the meantime, while we've got Michael coming back on, so Michael's some of the things we do want to talk about as we're going through this oligopolies. So issues with that. We'll start with the banks. I do want to run through as well some other sectors. The oil and gas sector is one which I know Michael's sort of been focused on. And one of the things we have been doing as well within the background, and Michael's been running this for a while now, is this idea of the companies that are not paying tax within Australia. So he has sort of his list of tax dodgers and companies that are basically transferring profits out of Australia and into other countries and sort of paying tax within other countries. And so what we've done on as part of the investment portfolios, we run a number of different investment portfolios, and on those investment portfolios, we allow people to screen out companies that they don't want to invest in. So, for example, you might choose to screen out tobacco companies, or you might choose to screen out nuclear power, or whatever it is that we've got about 40 or 50 different options to screen out, and also stuff to screen in. One of the things we have added recently is an option to screen out the tax dodgers, and we use Michael's work quite heavily in terms of coming up with that list. And that's the idea that we give companies a social license in order to invest in Australia and run their business in Australia. And if they choose not to pay taxes in Australia, then that's obviously a social issue that we're sort of facing. So so we've added that in. But maybe I might jump back to the banks, maybe, Michael, if it looks like we've got you back. In terms of the list of things the Royal Commission wanted us to do, how are we going through that list?
They're not selling fees for no service and selling products to dead people anymore and things like that. Hopefully they've cleaned up their act a bit. I mean, they're not perfect Royal Commissions, but I think that this very business of the judicial powers to subpoena people and to force people publicly to disclose things and be interrogated about them. The Robo-Debt Royal Commission, for instance, was very good in shining the light on a corrupted bureaucracy, which is a huge issue for Australia because it's increasingly been outsourced over the past
yes, I want to hit on that one as well. Yes. Yeah. But I guess so the answer for the Royal Commission, though, does seem to be that, for me anyway, is that, we had all these things. Both parties said, yes, we're going to implement everything, but the result is they've implemented a few of them, and they're just slow playing it for the most part. Is that what you're seeing as well?
Oh, absolutely. They're a very powerful oligopoly, aren't they? I mean, I think there was a significant point in regulation in the global financial crisis when, I'd long said when I was a columnist at Fairfax at that time that the banks were guaranteed effectively by us. It was an implicit guarantee. But of course, during the GFC, when they gave them the sovereign debt,
became explicit.
The deposit, the guarantee, and of course the ability to raise money on the Commonwealth at the Commonwealth bond rate or the backing of the Commonwealth. I mean, these are huge leg ups which no other business had. And then they introduced that committed liquidity facility, which is, I called it a bailout fund, and we got a rude note from the RBA saying, "Oh, it's not a bailout fund; it's an assisted liquidity facility." This kind of thing.
Yeah, that's right.
But the fact is, there are no other businesses. The banks at that point, it became explicit that they're underpinned by taxpayers, and that, in a sense, is a moral hazard issue, isn't it? Because it allows them to take risks, which, and it's been my view that if the housing market does completely crater, that the next thing the Australian taxpayer will be on the hook for is people's mortgages and the banks, if there was a mass default situation. So COVID then took it to the next level, because when they had JobKeeper, it then became evident that it wasn't just the banks, but every large corporation that put their hand up got JobKeeper, many of which didn't deserve it, many of which were still recording record profits, rising revenues during COVID. But nonetheless, only a few of them have paid it back. So Government now is
Well, that-
very much fused with large corporations.
Yeah, I mean that was the issue, wasn't it? It's that I think my accountant in particular, I blame for failing to tell me properly is that you didn't need to actually be looking at a downturn. You just need to be forecasting it. So as long as you're a bad forecaster, here's some money.
Very convenient.
Yeah, exactly. And then and the fact, yes, they said a stark contrast of the robo-debt at the same time is that, you may have given us extra money, we're not quite sure, but we're going to chase you to the ends of the earth to, well, we definitely gave you money you shouldn't have had for the corporates, and you can keep it. Yeah.
The double standard is glaring. I think that's where there is a general falling of confidence and trust by the public in large institutions, not just government. I think we saw during Scott Morrison's reign that there was incredible disaffection in the public with government, believing that it's corrupt. It was incompetent as well as corrupt. I think the Labor has proved themselves to be this point, they're still on a bit of a honeymoon, and Albo seems to be running quite a tight ship. But the essential problems of latter stage neoliberal democracy remain there. Captured regulators. We've talked about regulation before. Markets that are very dominated by large, powerful players.
Let's use that as a jumping off point to the oil and gas sector, because that's obviously another favourite. I look upon this, and we've run a few podcasts on this same topic about saying, well, we actually have a live example within our own borders of a market that is regulated and has gas reservation and didn't have this massive blowout in costs in Western Australia.
Yep.
And the Northern Territory as well. Two separate, because we've got three different markets in Australia, and we have this East Coast gas one where prices have gone ballistic and effectively, what was meant to be a price cap, or what sounded like it was going to be a price cap, was actually only a price cap for people that are on contracts. It's not on the spot market. So anyone relying on the spot market has had to cop it. And so it seems as if, and we know you've spoken as well about the amount of tax that these guys pay. It seems as if the oil and gas sector really has captured both sides of the government, and it doesn't seem to be there's any sign of regulation coming at any time soon, or any meaningful regulation anytime soon.
Well, they're screaming about what tiny regulation that's been imposed on them. The gas caps thing, which still leaves them with a more than 100% margin there. It is incredible to think that it's espoused as being leave the markets alone, free markets by our supposed free markets finance press. But it's not free markets. They act like a cartel. And to think that we're in a bizarre situation where we're the biggest exporter of LNG in the world, and we're importing our own gas back into Australia at, export price parity. It's bizarre. Why would the biggest exporter of gas in the world be importing gas? It is so bizarre. And to think that it doesn't even fall to the finance press for the lights to come on and say, this is just too bizarre. Look at WA, look at Northern Territory, as you say, Damien. And here they've got a domestic reservation policy. They earmark gas for their domestic markets. And the problem is gas determines the price of electricity. So it hits everybody, from people, households to manufacturers. It is a absolute debacle of policy, gas. And of course, they don't pay any tax either. Well, very little. If you look at, Energy Australia, and AGL pays a bit, but, Brookfield's just about to take Origin. Brookfield is some of the biggest tax dodgers around. That's expected to get the go-ahead despite the vertical integration, which is I would have thought, a huge worry for the ACCC. You got Macquarie Bank sniffing around Energy Australia, 50% stake now. Those boys aren't there, for the Good Samaritan journey. There's huge profits being made at the expense of consumers. It's quite simple. Prices are going up 50% right now on people's electricity bills. And these guys, the large corporations, which are mostly foreign controlled in electricity, they're the ones to benefit, and they don't pay a lot of tax, as I've highlighted many times. The big gas companies, of course, Shell and ExxonMobil, huge tax dodgers. Exxon, something like $80 billion over 8 years in total income, no taxable income and no tax payable.
Yeah, I know, it's incredible, isn't it? And I guess the thing is, like, I feel like the donations they've made to both sides of politics are not that big. Like, we're talking about a few $1 million a year, I think, to
It's cheap.
Yeah, that's one of my complaints. You know, if we're going to have a corrupt government, at least they could get fair value for, you know, as I said,
Well,
giving away billions of dollars in tax, but in for a few $1 million.
Well, it's interesting this morning that PwC has tried to seize the moral high ground and said we're not going to make political donations anymore. The numbers from the big four consulting and audit firms is, I think, 4.3 billion over the decade in political donations, and for that they're getting more than $1 billion a year now in federal government revenue. That's just gone through the roof. Their government contracts with the outsourcing of bureaucracy and government departments.
Well, actually, before we get to that one, because before we get off the oil and gas part, it seems as if independent sort of thinkers, let's say, seem to treat this as saying, okay, we've decided to create this artificial market in energy, because we know it's a natural monopoly, and so we've decided to create this artificial market, and we've got all these rules and regulations, and then we keep getting fooled by the companies who, you know, back in the Gillard days, it was gold plating all the assets. Now it's gas prices, you know, buying back at international prices for Australians, and we've always got this part where we're like, we have to try and set up all these fake markets, and then we've got to set up regulators to try and monitor the fake markets. And the reason why we've set them up is because markets are so much more efficient that you know, we're going to get a better result. Now, it would seem to me that at some point you might say, okay, we've had a go at this for 20 years, and all that happens is, yeah, they're efficient, but they're efficient at fleecing the taxpayer, and then we have to create up with new rules and regulations. Is there any sign, do you think, that that's the thought process is changing, or does it seem to be that, you know, the media is captured as well as our politicians?
Well, I'm very on the record, and I'm probably a little bit biased in saying the media is completely captured. We've got a duopoly, and the PMO, the Prime Minister's Office, funnels news through to a bunch of Canberra correspondents every night, and that's what leads the news agenda. And then the ABC and morning TV, commercial radio pick it up and run with whatever if it's, you know, an outbreak of school kids stealing each other's lunch boxes, as was without any sourcing or any evidence was the thing a few days ago, then you know, they run with this, and now they're into this business of reporting what each other are saying about the latest scandal. So it's a real navel-gazing exercise. And of course, you know, these are government subsidised, most of these big media companies, via the Google News showcase.
Well, so let's,
I don't know how much they're getting, but it's hundreds of millions of dollars, you know.
Yeah, so let's jump onto that one, because that was, I mean, so for anyone who's not paying attention, let me summarize, I guess, the way I look at it, and I guess see whether you agree, is that, to me, this was a little bit of a standover tactic where basically the government said to Google and Facebook and the big international media companies, you have to pay these local media companies for their content, but if you want to show, somebody types in whatever Royal Commission and it shows up the news.com website, or it shows up the Fairfax site, then you have to pay these guys. But if it shows up the Michael West site or the Nucleus or something else, then you don't have to pay them. And effectively was the government, you know, forcing these big companies to pay, and the big company and they sort of pushed back for a little bit, and then went, oh well, look, we're effectively paying a bribe in order to do that. And then I guess the government got the goodwill from the media companies, and then you tried to use that to. Is that you think a fair assessment? Or
and as a result, for instance, Google, having paid off in this protection racket the government's media partners under Josh and Scott ScoMo, they've gone back to paying no tax again. Like, this is a company which has billions of dollars in revenue, a complete 100% monopoly. I mean, who uses Bing? And you know, it's just insanely poor policy, because as we all know, we click on Royal Commission, we get a bunch of, when we go to Google, we get a bunch of links that come up and a little 2 lines of text. You click on that link and it takes you to the News Corp or the Nine Entertainment website. So it's free advertising. Google is providing these media companies, but they have claimed somehow to the politicians, Google's stealing our content, Facebook's stealing our content. No, they're not. They're providing you with free advertising. But it was on that basis that they claimed that they needed this supposed world first media reform. And there's no visibility as to how much money Google and Facebook have had to, pay Rupert Murdoch and Entertainment 7, etc.
Have you got a guess? What's your?
Well, it's hundreds of millions, I think, but there's literally no. They had one of those government, inquiries where they monitor it. How's it all going? And there was this flimsy document came out a few months ago, basically saying, well, there is a bit of a visibility issue here. Of course, there is. There's no arbitration mechanism either, and this is the way the search engines and the big platforms want it. What they fear, they don't mind paying a bit of protection money, like they paid in the Jordan Shanks Barilaro issue. They just were happy just to, they'll pay people to go away if they're being sued, just to get this out of the way. We don't need this kind of bad publicity, because otherwise, they just got so much money, these guys. But in this case, the law, it isn't even a proper law, because there is no arbitration mechanism, because Google and Facebook have said to the government, if you impose on us an arbitration mechanism, so there's a tribunal you can go to say, hey, Google, it's Michael West Media here, I'm suing you or I'm complaining because you haven't paid me enough money under this brilliant media reform thing. So there is nothing. So there's no way of checking if this works at all. It's purely a protection racket. And my sources at Google on background, of course, have said, yep, protection racket, not for you, mate. This is for Rupert. This is for Nine Entertainment. This is for Kerry Stokes. This is for The Guardian. It's for all the big players.
Yes. So we've got our banking sectors. No real change there. So it's a bit depressing here, but from an investment perspective, I guess it's for when no major changes. With banking sector, no changes. Oil and gas, no changes. Media sector, as you said, that's effectively a quasi-regulated industry, at least for the big guys. I guess we should move into the tax dodgers. So given we've set up a screen now so that people can screen these guys out. So do you want to sort of give us a bit of history as to why you came up with this list and how you do it?
Yeah, so a few years ago we decided, it was interesting because tax, as a finance journalist, and it's like analysts too, you guys go to an analyst presentation, a company presentation to analysts, whether they're buy side or sell side, they all sit there and they ask their questions, but they never ask about tax. And tax is a third of every dollar, or should be. So every dollar of profit, of course. So it's a massive issue, and it's the biggest way to save money. And it's mostly the foreign multinationals that do it because they have the capacity to do it by lending themselves money from overseas associates. I realised pretty early in the day that it was about 2013 that this business of tax fairness was huge in the public psyche, and I didn't realise until I ran a piece. I was at Fairfax at that time as a columnist there, and Google physically moved into our building. And, we're all slaving our guts out. The Fin Review got merged with the Herald on the same floor. And then the advertising department completely went because Google took all the ads for content providers. And Fairfax was physically shrinking, the Sydney Morning Herald and the Age and the Fin Review. At the same time, Google was going through the roof. So they were over the other side of a cricket pitch at the Googleplex at Piermont. And they ran out of space there. They built the building themselves. So they came into our building, One Darling Harbour over the other side of the cricket pitch, and started taking out floors there. Increasingly, they kept on getting bigger, and we'd be all working our guts out as journalists. And when in a certain lift well, when you went up at some stages, you could see these kids from Google with their sort of baseball caps on backwards, with their skaties and so on coming in, all those little scooter things that they bring to work, and they've got cafes and great restaurants in there. You know, we've got this hopeless cafeteria and everything like that on the ground floor, and we could see them playing pool on a yellow felt pool table. Like when we go up in the lift, and we're going up to sort of slave over a hot keyboard and get told, you know, here's your latest redundancy round and this sort of thing. While Google, so I did a quick check of their accounts, because of course they're not like ASX listed companies. They file once a year to ASIC, and their accounts
for their Australian operation, obviously.
They're Australian, Google Australia, Google Australia Proprietary Limited. So of course, here they are with this huge revenue growth in their Australian accounts, paying no tax. And Fairfax, which was losing money, still paying $30-40 million tax. And so I wrote this piece just comparing Google to Fairfax. This is pre the Nine Entertainment takeover. And it went quite well. And then I did a couple more pieces and did a piece on Macquarie Bank, because they used to be famous tax dodgers, the old Macquarie Bank. And I'm getting quite a bit of feedback. I'm thinking, well, finance journalists only usually write about profits and CEOs and how much dividends people are getting and corporate takeovers and things, but this tax thing is big. Then I had a guy from the unions come to me, a guy from United Voice, who represents the poorest people in Australia, the people that cleaners and this sort of thing. So we just did a survey of our 23,000 members, and we found that the number one issue for these people, we're talking about people, most of them probably can't read English properly because a lot of them would be migrants, saying tax fairness was their number one concern. So we started to do some more, and then by the time I left and set up on my own, we decided to start up this top 40 tax dodgers thing. It was just a play on, back in the day, you know, the top 40 song charts, you know, on the radio sort of thing. And we worked out a metric to do it, because I won't go right into it right now, but what we see, there's a lot of the multinationals, the point of their tax dodging is to not make a profit in Australia. And if you look at, say, an Exxon or a Shell, they will literally say, here's our $10 billion of revenue, and here's our taxable revenue or taxable income. Total income here, 10 billion, taxable income, 0. In other words, sorry, we didn't make a profit, therefore we don't have to pay tax. You know?
And just for
making a profit. And so all we did was did a couple of metrics around that, put it on a spreadsheet, and started doing it year after year, until a couple of the companies like Glencore worked out our metrics, and they actually gamed them a bit to take themselves off the top 40.
Right. Yes, well, that's a. I mean, that's, as soon as you start measuring something, that's when it goes to pieces, isn't it? Because all of a sudden people know what they need to get around.
It is, and at the time, PwC funnily put out a note to its clients around 2016, at the time they were cheating the entire Commonwealth by selling state secrets. That was the 2015 media corporate tax inquiry, which I got going with Christine Milne, and it was very effective. They had all the cameras there, and suddenly tax fairness became a big thing. And PwC put out a note saying it's not, back in the day, the double Dutch Irish sandwich was a glamorous thing. It was great to avoid tax. Now it's frowned upon. Behaviours have changed. Public perceptions have changed. Tax dodging is not cool anymore. And this is coming. And sure enough, it did come. And now companies are literally, and if you talk to the tax commissioners, Jordan and Hirschhorn and these guys, they'll tell you that because of transparency, Damien, the point you were touching on before, the point of transparency is it's so important for regulation, because tax avoidance thrives in the darkness of non-disclosure.
And as you said, for Australian companies, it's obviously a bit harder to do because they're within Australia. They don't have the chance to move the profits into, and for a lot of the time, as you said, that like the company's still made a profit. It's just they've gone, okay, well, I didn't make the profit. For example, Google goes, yeah, okay, I made billions of dollars in profit, but I just didn't make it in Australia. I made it in Ireland, and then I shifted it somewhere else, and then it came back with a lower tax rate. So, but it's interesting to note we do a lot of sort of quantitative analysis over company accounts and things like that as well, and the initial thought, I use it as something to try and pull out companies that are a little bit that have got underlying problems, insofar as you go, companies effectively done two books. They've prepared one book for their shareholders and said, "Hey, shareholders, look at all this money we made." And then they've prepared another set of books and given it to the tax office and said, "Sorry, guys, didn't make anything this year." And so I guess the assumption is that usually that they're lying to the tax department and telling the truth to shareholders, whereas for some companies it's actually a little bit closer the other way. So it's a sort of an interesting one in that the multinationals, I have no doubt, are quite profitable and are shifting it around. But the thing I quite often look at for domestic ones or companies that do this is actually, well, just a minute, maybe they're actually telling the tax department closer to the truth, and it's because you can get away with lying to the market. You don't have to go to jail if you lie to the market, but sometimes the tax office is obviously a different thing. So that sort of opens up, I guess, your thoughts on PwC. So I guess it's a little bit similar to that. The idea behind the government is behind the oil and gas is saying we set up this whole fake market structure and then we have to build all these extra things just to regulate that market structure. You're saying, well, why don't we just go back to what WA is doing and others and just have a largely a government run one for these. I guess that sort of extends to our government system, where, as you said, it's we've outsourced a lot of the bureaucracy of the government to the big accounting firms at massively marked up rates, and often just hiring back the same people who've then gone to work for it. We've just had a lot of focus on that with the whole PwC. Do you think that's reversing at all, or is that do you think that trend is, despite all the outrage, is sort of just the other guys will pick up the extra market share and we'll be off again?
Well, I think that's what's going to happen. I mean, there was an inquiry 2 or 3 years ago which passed with very little fanfare called the inquiry into audit, I think it was. It was a Senate inquiry like this one, which has been very popular, and they've done well, the Pocock and Deb O'Neill, in asking the right questions there. And it's interesting to see the way, I've been batting on about the Big Four being a problem for years because of the conflicts of interest. They've got the audit and they've got the tax guys telling people how to extract as much or contain as much leakage as possible in the tax thing. And the audit partner across the other side of the rice paper Chinese wall at all of the Big Four ticking off on the accounts as true and fair. So that's a huge conflict. Huge conflict. I mean, Lendlease is getting audited right now. And what's KPMG? What's the penalty for KPMG? Well, nothing. They've been the auditor there since 1957. So we can do with a bit of audit rotation as well. But there's a problem with the Chinese walls there. And as we've seen, if they're consulting the government, telling, these are the tax laws you should bring in so we can capture some more Commonwealth revenue. But at the same time, you're running around selling, your tax partners are flogging it to foreign multinationals to avoid as much tax as possible. In fact, this morning I was just preparing a YouTube video, and I thought I'll just give one example of one of these guys that PwC marketed to, which is Uber. And I looked at the Uber Australia accounts. Now, these guys made in 2022, they claim to have done $2 billion in revenue. Of course, Uber, you can imagine, just sailed through the pandemic because, of course, we were all ordering Uber Eats and getting Ubers around. So, the drive share didn't do as well, but the Uber Eats just went ballistic because restaurants shut down. So, $2 billion is what they show when you open up their financial statements and look in their accounts. We went up from, $1.6 billion to $2 billion last year in revenue. And here we are, and we've got all these expenses, which always miraculously rise at the same rate as revenue or more. And there we go, no profit. Here we go. We'll pay, 5 or 10 million in tax. If you go down to the back of their accounts, you see what's going on, like in the related party transaction note, and you will find the money that they actually collected from Australia last year was 9 billion. And that was up from 8 or something. I mean, massive. And this is basically, what is it? It's a computer, because everything is outsourced. They call their drivers, the poor little bastard on his moped driving over the harbour bridge in the rain. They call these guys their partners, so they don't have to employ anyone. They're partners, not staff, and customers and so on. So they collected 9 billion, but they don't regard that as being revenue. They deem, as Google does now, and this is exactly the advice that PwC gave them when they were advising the government. He said, this is what you do. Just change your revenue figure, because then you can, change your profit figure as well, and just do everything. Just say, no, we don't regard that as, but we don't record gross revenue. We record net revenue as our revenue figure. Now, if you're a bank, it's a bit different. If you're a betting company, like your total sports bet might have 100 billion, but 10 billion is the real actual revenue. With poker machines, if you look at the accounts of poker machine companies, that's the case there. But they've just come up with a fallacious revenue number. Now, imagine if you or I, our companies, were to say, oh, we don't like this, having to recognise the money that we get in, to our fund management outfit or our media outfit. We don't recognise that as revenue. That's a gross figure. And what we report as our revenue is 1/3 of that, So it's one of those plain forest for the trees, complete, huge, gigantic. Well, it's not a fraud because they're honest about the deception, but it's just a complete.
It's in the grey. That's right. It's in this grey area where you're saying you've been given a social license to operate in this country, and that part of that social license, should be that you're paying tax to help keep the whole thing going. And if you're using our laws and systems and property rights, then you should be paying tax. And then but as you said, the difference between the Labor and Liberals on this, do you think? Is traditionally you'd say Liberals are sort of more going to let companies get away a bit more with the tax, but Labor would crack down. Are you seeing any signs that Labor is being harsher on companies in terms of paying tax?
Well, the reality is that Labor policy is better than Coalition now, but the Coalition, it was Abbott and Hockey that brought in the 2015 mail reforms and the Google tax and the transparency demands that all the big companies in Australia had to produce 3 numbers annually, and that to say how much tax they paid in this country. So it was the Abbott and Hockey government. Now, Andrew Lee's the guy behind the Labor system finance guy who's behind the country by country reporting. They've just walked away from that. That was an election platform. And they just went.
Sorry, do you explain again what the country by country is?
Well, it's just a transparency thing. It's saying we're going to show how much tax we pay in all these different countries, which means that there's not going to be as much scope to
be able to say, I made all my profits in Ireland and nothing in Australia. Yeah,
that's right. So just another transparency reform, which would have meant they would have had to pay more tax, and they've just had it junked. Well, not totally junked, to be fair. Delayed. When somebody comes out and delays something, it's like the money laundering reforms, which still don't apply to property developers, lawyers or accountants, because stakeholders have been lobbying for 15 years. And the tranche 2 of the laws, if you're a bank or a bullion dealer or a casino, you've got to, anything more than $10,000, you've got to say where it's come from. But of course, property developers and the Big Four and the legal fraternity, there are no rules. You can launder money. So that's why Australia's, a white-collar criminal's paradise. And that's why the property market is a terrific place to launder, for foreigners to launder money. And it doesn't help people younger get into the market.
So we had Nathan Lynch on, I don't know, maybe 6 months ago, a year ago, to talk about the lucky laundry. Yeah. At the time, he was optimistic that the government was going to do something about it. I guess my take at the time was they're going to tick the box of corruption by putting on the the federal ICAC, and then they're going to leave all the rest of it for later. I don't know what. Can you see any movement in terms of actually doing anything on the money laundering, or are we really waiting for international people to?
There's a big fuss over, of course, federal ICAC and the NAC, or the SNAC as I call it, because it's not transparent. This is the problem. We're not going to see it. We're not going to even see the findings unless the commissioner deems that, and then it can be challenged on the High Court. So I'm disappointed with the National Anti-Corruption Commission. On the AML stuff, Nathan tells me, funnily enough, I just chatted to him on Sunday, he says they're beavering away assiduously behind the scenes in the Attorney General's department, getting this together, because Dreyfus, being a lawyer, has more clout with lawyers. He's saying, no, it's too late. Time's up. We've dithered enough. The first tranche of the laws was brought in 2006, and the second tranche was meant to be brought in 2007, 2008. And here we are, 2023, and it's still not brought in. So it's a cracker of delay. It's like the grandfathering laws, which were brought in by Keating and only just been solved by this Labor government. But it's like, I wouldn't be counting my chickens before I hatch until you actually see it. And you see the detail. There's such a big schism between what the politicians announce and the actual detail of their policies when you have a look at it. And I won't believe it until I see it. But the fact is, there is huge international pressure on Australia because FATF, the Financial Action Task Force, keeps on poking fun at us in international circles, like we are regarded as being worse than Pakistan on anti-money laundering and counter-terror financing laws. We're dragging the chain internationally, and it's only a matter of some incredibly embarrassing thing coming from the OECD having a crack at Australia, and our reputation is on the line here.
Yes, well, morally and ethically, I'm with you. I guess what I'm worried about, and I guess what I'm worried about is that they'll do all this hard work and then they'll come out to the cabinet and they'll say, this is what we're going to do, and the cabinet will say, oh, that sounds like it might put house prices down, and they'll go, yeah, probably would, and then they'll say, well, why don't we leave that for the next government? Why don't we kick that? Let's put another review into this. Isn't that the
I think
standard?
You're right about that. I mean, ultimately, it's this business of it's never a good time to put risk into house prices, because 65% of Australians own their own home, and a surprising number of those don't actually carry any mortgage on it. But so if you're following the 50.1 policy rule, anything that benefits the majority of Australians, that's what we'll stick to. You're just going to be favouring those people with property, not those without. And unfortunately, like the rental crisis is, and home ownerships, it is really, really extraordinarily bad at this. You just got to talk to anybody under the age of sort of 30 trying to get set in a metropolitan area, and they turn up to an inspection and there's another 40 couples got with their name on the list. I mean, there's a serious supply issue there as well as price.
Yeah, and how much? I mean, how much do you put down to the amount of immigration we're running, I guess, versus to that in terms of supply? That's
a hot issue, and I've been waiting for that to boil over a bit more because, of course, the thing is, the corporate media again, who tend to control the narrative. That's why gas gets away with so much, because they're completely in gas's pocket. I think because the business community, the BCA, etc., they're all very pro immigration, high levels of immigration, because it creates more labour, therefore less tension in the price of labour,
and pushes, that's right, pushes wages down,
and pushes wages down and creates economic growth because there's more people buying stuff. So the problem is business is always pro, but there's the ability for populist politicians to be demagogic about this and start blaming migrants for things is there. I mean, it could boil over any time, because what are we taking this year? 700,000, a lot of people. And there is that latent sort of xenophobia going on anyway. I mean, politicians have been exploiting it for years. They're still exploiting it now. The poor old asylum seekers, we haven't heard much from them lately, but it's good politics to be wary of outsiders. We look at the guy in WA, the most loved politician ever.
Yeah, for locking even other Australians out. Yeah.
Locking Australians out. And just, well, he was backed by Kerry Stokes. In fact, they've actually, going back to the gas, Beach Petroleum has been very suspicious. This decision politically, Beach Petroleum was given a carve out from the onshore gas exploration laws in WA, just carved out for Beach. Of course, we know who's in Beach. Kerry Stokes is in Beach, and Kerry Stokes runs the dominant media place there. So, it's a bit of a stinker. It'll come out at some point on the East Coast.
Yes. Okay. Well, you're not, from an investment perspective, you're it seems to be saying there's not a lot changing, but from a social perspective, it's a little bit depressing. It's
right. And you know what it's like. I used to be in the markets, trying to flog ideas to fund managers, and back in the day, very, very badly, I might say. I don't look at things as much through an investment, more through a social equity thing now than from an investment thesis. But, there's a lot of money riding foreign investors on poor regulation in Australia and lack of competition. The ACCC has a huge job on its hands. I personally think they should start. We'll look at Origin, for instance. We've got Angus Aitken running around, perhaps correctly, saying that Origin's, $8.90 is too cheap, should be double that. And here they're running around to, they're saying we're going to close Eraring, the biggest coal-fired power station. And here's the Fin Review writing every day, oh, no, we must keep Eraring open. Well, who's going to pay to keep Eraring open? Yeah. Oh, are you suggesting, Mr. Fin Review, that taxpayers of New South Wales pay to keep this old clunker open? Is that what you're suggesting? No, they're just saying we need to keep it open. Origin wants it closed because it hasn't got its own coal, and it's got to buy on the stock market at $145 a ton. It's been up to $400 a ton, or more. But the fact is, old clunkers are not reliable, despite the coal industry protestations, and the coal price is too high to make it efficient. So Origin itself, wants to close this thing, and yet there's so many people in the lobby group say, no, don't close it. We'd rather put taxpayers on the hook to keep this old coal clunker running.
Yeah.
There's all these anomalies out there,
Yeah. So this is my issue is that when I do all the levelized cost things, but I guess the big difference I do whenever I do levelized costs sort of analysis of electricity is I say, I want to know how much is the fuel costing me, and then how much is the underlying asset costing me. So I'm going, okay, well, if coal is whatever, 7 or 8 cents per kilowatt hour, is then you're saying, okay, well, actually 4 or 5 of that at $100, maybe $70, at $70 coal, that's like 4 or 5 cents. So if we're talking about double that, you've actually got to double that fee. You can't look at the old figures and say, yeah, it's 7 or 8 cents per kilowatt. It's actually more like 12 or 13. So you're much higher than solar power and even solar plus battery. If we're talking about running, $200 coal prices through your models. And so, that's for me is a big thing about, there's a lot of political support for these about saying, and the costs are similar, and you get baseload power and all that. And you're like, yeah, the costs are similar if you go back to prices from 3 or 4 years ago. If you go from the prices for the last year or two, they're nowhere near it. They're 4 or 5 times higher for these assets.
Oh, massive! The coal prices through the roof. It's not like the gas price too. Like it's expensive, and so solar and wind are going to be cheaper. I mean, we noticed it about 5 years ago, didn't we? When suddenly, the cost of new solar fell below the cost of new coal.
Yeah.
And now there's just no competition. I mean, renewable is so much cheaper, renewable energy, than fossil fuel energy. But we're in a real battle royale here. I mean, this is a massive battle because poor old Tanya Plibersek has been given the poison chalice of being Labor's pretty owned by gas. And to go back to donations, which you were saying, donations, I think, are secondary to lobbying. Lobbying's the thing. Lobbying's the big thing. It's who you talk to every day, who you sleep with at night, in case of some of the Labor people. Government relations people for Santos and for Original is very powerful. They've got APIA, which is extremely powerful. There's large donations. They literally just plant people that just run around Canberra, sucking up to politicians and bureaucrats every day. That's their job, swinging policy. So this is far more potent than donations, the actual lobbying that goes on. I just think, we're in a terrible situation, really, because the world's saying, look, we can't put any more fossil fuel projects. Our national wealth is so based on income from these things. It's a massive switch for us to, well, not only building the transmission for renewable grid, but the cost of losing some of those exports while you've still got these markets here and not opening any new fossil fuel projects. But here's Tanya, the Environment Minister, ticking them off like there's no tomorrow. There's a new coal plant, Ainsworth, and here's another one out here, and new gas projects, and the Greens are going crazy about it. And some of the more the left of Labor, they're absolutely crazy about it. But Labor's going, well, we need the money, we need to get back into power, we need to be FIPS.
Yeah, well, and yeah, and I've sort of been fighting with people for years on the whole idea that, look, you're on a technology curve for these ones. Your technology, and cost gets lower and lower every year, and then whereas your coal mining and everything's on this scarcity curve where every year it gets more and more expensive.
Yeah,
and the point that, look, now we've actually crossed that point where solar plus battery actually is cheaper than most of this coal, and there is some storage issues and certainly some of the longer term storage, and working out, it's probably more about working out the you go through a week without wind and overcast days and all that type of stuff. What are we doing to augment during that time? But most of the arguments from a financial perspective have been well and truly solved. It's really a question from political side, though. We're still using all the prices from 5 years ago to try and argue the case. And actually that leads on to the latest one, which is the whole nuclear. I don't know what your thoughts are on the nuclear. I just know from my perspective, I've been a follower because I have so many people come back to me on my nuclear costs, which always tend to be right at the top, and saying about the small modular reactors and how great they are.
They don't exist, though, do they? I mean,
they don't exist. No, and the company that actually produces them, the big company that's out there pitching it, they've doubled their costs over the last 3 or 4 years, and that's before you add in, and they've got an extra $30 credit, $30 or 3 cent per kilowatt hour credit that's going in there. So not only are they the most expensive out there, but their prices have doubled over the last few years, as they've been saying, because they came out. That was, I guess, the pitch was they came out and went, "We can do this for 5 cents a kilowatt," and everyone was like, "Fantastic! Let's go build the ball." And then as they've tried to do it, we've worked out the costs are double that at least. Yeah.
Well, I've been talking about SMRs for a long time, haven't they? Like carbon capture and storage. I mean, it's
exactly
and scientifically feasible.
Yes.
But it's not commercially feasible because the costs are too high. Of course, you could build a small modular reactor, but why isn't there anywhere in the world when France has been running 70 or 80% nuclear power for generations? It's not feasible, and it's interesting to see why. I mean, Dutton's been rabbiting on about it lately. Well, of course, we know why, because the coalition haven't got any policies, so they just want to chuck up anything that opposes what the government's doing. But what you do when you're in opposition. But the fact is, there's no case for it because there's not one of these things operating anywhere in the world. Then you've got the cost, you've got the risk of nuclear waste, you've got so many issues with it. The cost is immense. All the actual nuclear plants around the world are all way behind schedule. The ones that are being built at the moment are way over cost.
Yeah.
Too expensive.
Except in some developing markets, and this is the argument as well. If China can build it and places like that, is like, yes, but basically what you're saying is if we just got rid of the regulation, then these things would get built a lot cheaper. And you're like, absolutely. If you want to get rid of regulation around nuclear meltdowns, then absolutely you could produce them for cheaper. Is that what we want?
China's always the one, isn't it? Because they're so efficient, the Chinese, and in fact they are building them over there. But at the same time, let's not forget, they are making by far the biggest strides in renewable energy of any country in the world at the same time. So, that points to their conviction that this is the way to go. And you only had to go to China. I believe it's got a bit better, but you've only got to fly over the place or go to an airport there, and the smog is just horrendous in India or China. So they know they've got to make the transition.
Yeah, but most of that costs maybe Yeah, no, most of that cost is regulatory as well, in terms of it being that if you're trying to do something in France or England, as we're seeing very much in the English one, is that the regulators are all over you to make sure this thing's safe, whereas in China they're just not. And so, because it's often the same party building it, so yeah, you can save costs if you don't have regulations, I guess, is the answer. But I don't know if nuclear power is a place to test that. What happens if we go without regulations? But the other thing on those, though, I mean, I guess I'd say it's to me it's a bait and switch though as well. Like I wouldn't be surprised if this is the gas lobby driving this.
Yeah.
Because if I can make a solid argument to people that, hey, just wait a few years, keep using my gas-fired power plants and my coal plants for a few more years because small modular reactors are coming.
Yeah.
Don't go build solar power right now. Leave that. Let's go and if you got a few of those going, they would last. They'll be, as you said, they'll be late. They're gonna take 5 to 7 years straight away. Plus, then they'll be late, so it'll be 10 years. There's 10
the
years.
nuclear subs. They'll be arriving the same time the nuclear submarines do, which the latest is we don't know, in fact, if we're going to be getting any at all.
Yeah.
I said, no, then you might not get any. Was something I read yesterday, but there's a huge time for it's purely a distraction play. It's not feasible financially and in politically. We haven't had the debate. Do we want nuclear power?
Yeah.
Well,
and it's a much easier thing to say that we want this from opposition, isn't it? Than if you came out while you got 10 years in power and you never mention it, and then 20 minutes after you've been kicked out, it's all of a sudden a huge priority. So yes. Okay. Any other major sectors that you think are particularly egregious, or are there any actually going through a change? Are we looking at a change in any of them where we're going to actually see some more competition and benefits for consumers?
Well, it's interesting competition, isn't it? I mean, if you look at the airline market, that's a massive duopoly. Well, Rex is having a bit of a crack, but it's Qantas and Virgin, and there's always been good domestic market competition between these two things. So you can have a situation where you've got a duopoly which is highly competitive. You've got other ones, say, until the boutique beers, but you had a brewing duopoly, which only competed on advertising and never competed on price, because you pay the same for. You never see a price war in schooners and middies. So some duopolies, some competitive situations tend to work and others don't. But I just think personally, I think the government's got a huge nightmare on their hands in terms of competition, because really, look, it brings capital to Australia, because it's easy for an analyst to say to the foreign clients, this is a stable, got a Westminster legal system, stable democracy, attractive place for capital, because everything's a duopoly or an oligopoly or a monopoly. And the margins are fat. And they are. I mean, the cost of living in Australia is pretty high. And I think that's also makes it an investment target, doesn't it, for foreign investors? So we got franking credits and various things. So I think overall and we got superannuation mandated, there's money just flooding into superannuation every, I don't know how often you get it, guys. Is it every month or is it every year? Or
no, it comes in every month. Yeah. So it
comes in every month, just drops in there. I mean, I'll tell you one which is interesting. I think I haven't done enough work on it, but the super fund issue with the private assets, the unlisted, assets.
Yes.
And I think this is another one where there's going to be a transfer of wealth from younger Australians like property to older boomers who are retiring. All be looking after the boomers with their health and their age pensions. And already DIY super tax breaks are running at about $38 billion a year, and the age pension's only 40. So there's so many.
Yeah. So let me explain that for listeners who want to step behind on this. So basically, the big super funds, a lot of the big, especially the industry funds, moved into a lot of unlisted assets years ago. They've been doing it for ages on this, and often they own them. So like an airport, for example, I think pretty sure Sydney Airport's one of them, but there's a bunch of other ones where they might, a consortium of 3 or 4 will sort of own these assets, and they'll put them on their books at whatever price they want to. So when you put your money in, they'll say to you, okay, you've just bought part of Sydney Airport and we're going to sell that to you at whatever, $1 a share. There might be a listed version, which is sort of sitting opposite that you could see. But the prices that they sell it to you in their unlisted, they can basically, I mean, there needs to be a basis behind it, but they don't need to. It doesn't need to be mark to market. So if all the listed airports fall by 50%, they might say, "Oh no, actually our airport's only fallen by 25% because we're way better." And so what that means is if you're putting money into this super fund, you have to buy those airports at inflated prices. If you're in retirement mode and pulling money out, you get to sell to some new person coming in at inflated prices. And so there's this inherent unfairness behind it. And there's some arguments out there, which I've seen in the past, that basically if you look at some of the outperformance of some of the better ones, the super funds that say they're doing really well, a lot of it's just that they've been very, very good about marking their own homework. You
don't mean Host Plus or any of those guys, do you, mate?
Oh, we do all our own super. So all our super's listed.
Nothing wrong with bagging a competitor.
No, that's right.
So you're right. Like it is just unfair. And they can do their own. It's like directors' valuations, isn't it? They can do their own valuation, and it's not realistic. And I think in the case of that one, it was 20% of their assets are unlisted, so they're just sitting there, just marking it up, and that was like a good deal of their superior return for last year when they topped the league table. So at some point, if they have to mark this stuff down, and at some point, there's always a crack with these things, isn't there? If there were independent valuations, the values would be much lower, I'd say. But you want them in this space, mind you. I think it's good to have them in this. Selling stuff to people like Brookfield that aren't going to pay any tax, and where the money goes off to the Caymans. I mean, it's good to have our superannuation in good, solid infrastructure.
Well, I guess the question for me is saying, and because I look upon the listed asset market, obviously that's what we invest in for ours, and so I guess in a way I look and say, well, what's the benefit of having these things of being unlisted? Is why don't we just have a listed market? And if the super funds want to buy it, they can buy it. Like what expertise do they have running companies that's going to add value to it? Why don't they just have it as part of a listed asset? And the argument in the past used to be that you get better returns in these unlisted assets because they're illiquid, and you get to buy because you buy them at a discount. Now that was true 20 years ago, but it hasn't been true for the last few years. A lot of these things have been selling at premiums. And so that's the other problem is that, it's sort of, I used to be able to buy these assets at a 20% discount. And so they got better returns as that discount went from 20% up to 0%. And arguably for the last few years, there's been so much money in private equity bouncing around and so much cheap debt that they've been buying these things at a 10% premium or a 20% premium to the listed market. And so then the returns you used to get are just no longer there because the prices you used to get are no longer there. So that was one on the super. There was something else on the super I was going to talk about was lost it. It was just
Damo, what we might do, we might just go to a quick message and give you a moment to think about that one.
Yeah.
We'll be back with the investment insights very shortly. Nucleus Wealth is an active and passive investment manager. If you like what you're hearing and want some help with your investing, we can do it for you via our active portfolios. Our tactical and core portfolios use the insights shared in this podcast to construct and manage your investment. We blend tactical portfolios to offer our combinations of international shares, Australian shares, government bonds, and cash. We vary the asset allocation with the goal of protecting your capital in times of market uncertainty. We also have active international and Australian share portfolios. These are chosen using our quality and value investment philosophy. You can find out more at nucleuswealth.com. Now back to the show.
Okay, so the other one, I've remembered this. So ASIC sort of came out a few years ago and basically said superannuation fees are too high. And I do have some sympathy for this argument. We benefit from this, but I do agree that across the whole industry, you could certainly make an argument that fees are too high. And how we're going to fix the fees being too high is we're not going to let any more new super funds in, and we're going to tell all the existing ones to merge. Now, ordinarily, I don't know, in a lot of other places you go, fees are too high, I want more competition. We've gone down the opposite route. Fees are too high, we need less competition. I don't know. I'll flick across to you and see what your thoughts are.
Well, I mean, there was Chris Bricky did a good job in this. The Fat Cats report a few years ago, we started actually doing proper comparisons of how high the fees were, and looking at ANZ. Some of ANZ's funds, particularly were highly inefficient, and people were just losing it all in fees. And that resulted in fees coming down generally. But there's no, on your economy of scale thing, they've let Australia. I haven't looked for a couple of years at Australian Super, the biggest super fund in Australia. But if you do look at their reform, their what's the word? Economies of scale, they haven't got any more efficient. And the reason for them saying, "Oh, look, we'll run around and buy all these other super funds," is that we're going to get efficiencies because it's under the same head office. So we'll take out all those duplicated costs and all this sort of stuff. Well, it never happened because their costs never went down commensurate with the amount of stuff that they bought.
And possibly there's a few in there that
it's empire building, and this business of having boxes at the tennis and spending all this money is just, I think it's a bit of a vanity thing.
Yeah, well, that your point is saying exactly there. Whereas I say to you, "Oh yeah, I'm managing a $30 billion fund. You need to pay me X." Now I'm managing a $60 billion fund. Well, you know what? I want 2X because I'm just, you've just doubled your thing. I want more money, and so, I don't know. I think there's exactly an element of empire building in there, and then, but yes, it's interesting to see though that Vanguard, who are pretty good on the fees usually internationally, they've come in with fees that are pretty similar to a lot of the industry funds. So
have they? Yeah, no, I hadn't noticed that, but
we'll
see whether they, if it's a big margin market in Australia, why not?
Yeah, that's right.
Well, a little bit below everybody else and have a crow about it, but
yeah. Well, yeah. Anyway, watch this space because we've got we have our solution or our lowest cost solution on that. So we charge 17 basis points, and we're on a number of different platforms, number of the different big platforms. But once you add in the little platform fees, they've got a lot of fixed costs, and so for people with 100,000 plus, it comes out to be all right, or $200,000. But for some of the lower balances, it ends up the platform takes 75% of the money.
Yeah.
Whatever we add, they add a whole bunch more on top of it. So we are looking. There are some. I think we're in the final throes of sort of another solution, which will hopefully bring that down a bit more. But yeah, as I said, I feel very much in that case that that I'd like to see more competition rather than less competition to bring down prices. But it's especially as you said, when they turn into vanity projects, we're basically saying we're going to build some oligopolies because that's what Australia does. Is these things won't merge themselves. Let's create our own oligopolies.
Well, it's a perfect business solution, isn't it? That's what you want. If you're in business, you want a monopoly. Unfortunately, if you're a regulator, you don't want them. I think Australia's got a real problem.
Well,
the tax guy at least can look at this and go, look, the biggest, most profitable institutions in Australia aren't paying enough tax. They're not pulling their weight. If they did a bit more on the transparency front and sort of shame people into pulling their weight, paying their fair share, their job really is easy when you think about it than the ACCC that will be condemned for stopping mergers and takeovers by everybody for being for being too strict with the rule book. But when you think about it, like, why would you allow these assets to go offshore? And there was 150 billion worth of it under ScoMo and Josh. Was a huge thing, the back half of COVID. Massive sale, Ausgrid, and just massive sale to foreign players. And I just think, surely, I don't even know because FIRB's so secretive, but does the tax office make a recommendation to FIRB before FIRB approves it? Because FIRB's got to approve on national interest grounds. Is it in the national interest for Brookfield to come in, take over Origin, despite the vertical integration stuff, which is going to cost customers, even if they, what they use they siphon bits off and try to protect.
Yeah.
But even if they do that, the tax man surely must be looking at this going, hang on, Origin paid 160 million in tax last year. Brookfield pays zero. They take this to the Caymans, as they already said they're going to do in the fine print. We're just going to lose another 160 million, or whatever the figure is. Origin's been a tax dodger anyway, but they do pay a lot more tax than the foreign energy players. Surely it's in the national interest to go, well, why would you be allowing super funds or whatever? Fine. Even private equity guys are going to relist it, maybe, but why would you be allowing foreign tax haven domicile people to control, as they do with our hospitals, part of a good deal of the electricity grid? It just doesn't make sense to me. I mean, maybe it's something I'm missing, but
well, they're allowed to make higher profits, so
they're allowed to make higher profits,
and then they can go back in donations to political parties.
Yeah. The virtuous circle.
On that happy note.
Yeah, now we're going to go to the question of the week. So this is for viewers to have some discussion in the comment section over the coming days. The question for this week is, are there signs that vested interests are losing control of the Australian political process? After all the conversation, I think we probably know the answer to that one. But feel free to post your thoughts and engage with us and some of the other viewers over the coming days. And we're just going to go to a quick message again. We'll be back again shortly. If you like what you're hearing but want a low-cost passive option, Nucleus Wealth is the first to offer passive direct indexing in Australia. The first generation of passive investing was index funds. The next gen was ETFs. Now, direct indexing is here with significantly more customization and control. The benefit of direct indexing is you can add or subtract investment themes, and we have almost 100 different options to choose from. For example, you could buy an international share direct index portfolio that excludes fossil fuels and arms manufacturers and has a tilt towards cybersecurity and cloud computing. Alternatively, you could buy a portfolio with no screens and an extra exposure to nuclear power and defense contractors. You can find out more at nucleuswealth.com. Now back to the show. Excellent. So, Michael, just want to give you an opportunity just to let the viewers know how they can find you, or let them know a bit more about what you do, so floor's yours.
Well, as Adam Bant once famously said to the Fin Review journalist at the National Press Club, Google it, mate. So yeah, now you can find me on Google. We've got a website, YouTube channel. We're across Instagram and TikTok, even Twitter mostly. Facebook's a big thing, and LinkedIn a bit. So I mean, the media these days, of course, these are our newspaper trucks. It's just.
Are you on Threads yet? That's a good question.
Yes, I didn't do it myself, but I got a guy that did it and I had a look at Threads, but I haven't actively engaged. But look, I know, are you guys there? I mean, you've got to be in all these places.
I mean, exactly where you have, where it's popped up. I don't know. Like, I use Twitter a bit myself, but I don't know about Threads yet. I still need to work out how much I'm gonna use that part.
Well, Twitter has changed. I was motoring towards 100,000 followers on Twitter, and suddenly Musk takes over and bang.
All right.
It might be a conspiracy theory, but I've really ground to a halt in terms of growing on Twitter. It's good to have this competition. It's another tech billionaire, sure, but why not? I think it's good for free speech to have more platforms. I don't know how long Facebook will be lasting, but this is what we do as a media organisation. We just create the content, and hopefully, we don't have any corporate agendas really, or any. It's all just public interest journalism. We're not backed by any or paid for by any corporations. No advertising, and we're not politically affiliated, although we're sort of progressive, very progressive by nature. But so there's nobody interfering. We make mistakes like everybody else and correct them immediately when we see them. But yeah, it's a wonderful place to be. The business model isn't that great. We just put the hand out and say, can you give us $5 or $10 a month to as many people as possible? A few thousand people do that as a community project. Our spiel is don't pay so you can read it, pay so everybody can read it. So there's no paywall there. We've been growing for years. And I think that if, with a bit extra resources, I think independent media will have to put corporate media to the sword because they're all cowering behind their paywalls these days, having to follow each other's stories to generate interest, So they cover each other's stories, so it ends up on the Today Show, and you get what's called secondary media. It's media about media, and then the Daily Mail, says what Sky News has said about it. It's very navel gazing at the moment. So we try to hammer out some good independent stuff, public interest, and following the money in politics like donations and lobbying and this kind of thing. So that's our bailiwick, and we tend to listen to people that fund us a bit, and they say, look, can you do this or can you do that? And we listen to the public, and it's like the sort of local footy team with being you don't get a return, you don't get a dividend or anything like an investor would, but you just get, you don't even get a tax break because it would take us probably 2 years to get DGR status. So,
but you feel better about giving you the money than giving, say, Rupert a little bit more money for
it's interesting, isn't it? Because
Australian.
5 or 10 years ago, everyone looked at the internet and said, well, that's free. We don't pay for that. And anyone under, of course, 30 is used to this culture not paying for anything. So now they put paywalls up. So what are you trying to charge us to read this rubbish? And so, but the market has changed a bit. There is this recognition now that we're going to give money to the thing which we want to back. So you can't back everybody now, can you? You can't back. You just back whichever one is your favourite media outlet, just like a football team or whatever. I think it's very similar to that, and it's a community sort of thing. People realise there does need to be change. So there's so many avenues of change that people need to see. We can see it in politics with the duopoly there now subsiding a bit, and the rise of the teals and the greens. It's happening in politics as well. I mean, there's this falling trust in our largest, most cherished institutions, and that's being reflected in customer behaviour.
Yeah, but I think the important thing for anyone who's sort of hasn't been intimately involved in the media business is the difference is let's say I became a big let's say Michael did take advertising and I became a big sponsor of him in terms of pouring money in, and then Michael writes something negative about me, and next thing I'm on the phone to Michael, or one of his journalists more likely writes something negative about me, and I'm on the phone to Michael saying, hey Michael, call your attack dogs off, otherwise I'm pulling all this advertising. And
that's right. Well, there's only one place to complain, and you're speaking to him now. So
but it's
I'm amazed. Like I don't get any complaints anymore because there's only one guy to complain to. When I was at Fairfax, they were complaining the whole time. We got lawyers and PR people whinging and stuff like that the whole time, and going above my head to whoever was on the board of what's now Night Entertainment, and whinging. And Alan Joyce at Qantas was one of the really bad ones. The CBA guy, he was bad too. When Adele Ferguson did that stuff with Jeff Morris, the whistleblower in their financial services, they threatened to pull their out. And like, if you're Qantas, what do they spend? $20 million with Nine a year. If you're Harvey Norman, the biggest advertiser in Australia, even bigger than the federal government, I believe, these guys have immense power, and you won't read too much criticism of Harvey Norman going on in the mainstream media, or of the banks, mind you. And this is the thing, because they are huge advertisers, the banks.
Yeah. Yes, that's right. Excellent. Okay, well, thank you very much.
All right, boys.
Really appreciate your input.
Good to be on the show. Thanks very much.
Thanks, Michael. Thanks, Damo. If you enjoy our content, subscribe to our YouTube channel now, like the video, and click the bell below to make sure you don't miss out on any special episodes or future content. If you know of anyone that might get some value out of today's episode, we'd really appreciate it if you do share it with them. We do put out a lot of other content in addition to this podcast. We have regular articles that are featured in all the major Australian publications, hopefully in Michael West going forward too. To get all this, you can subscribe to our weekly Nucleus news and investment insights at nucleuswealth.com. We do welcome your feedback on the podcast, especially in regards to suggestions for future topics. If you do have any ideas, please drop it in the comments section below, or send us an email at contact@nucleuswealth.com. So for myself, Damien, Michael, and the rest of the team at Nucleus Wealth, thanks for watching, and we look forward to seeing you next time. Bye for now.